Hello. So let's start and set the scene, my fellow business owners. So you own your business and you think, how hard can this bookkeeping thing be, right? So I'm just going to jump right in and take care of all of it. And then tax time comes and there's all of these mistakes. So today we're going to go over some common mistakes, but bookkeeping version. So please continue to listen. I'm just going to hit a few things real quickly here so we can all get back to our busy schedules. But my name is Katrina. Me and my business partner Cheryl, we work together with our business that's called Empower to Profit, where we focus on helping small business owners bring home more money into their personal pocket so they continue to do what they love and grow their businesses. So we're going to hop right into it. Let's get started. The first common mistake a lot of times when I start working with clients when it comes to the bookkeeping is thinking you can do all of your bookkeeping in December or in March when your bookkeeping is due or your tax accountant asks for your profit and loss report to go ahead and file your taxes. You think, no problem, I'm just going to hop in real quick, accept all of these transactions, should take me an hour, maybe two tops. We'll get the report over to the tax accountant and bada bing, bada boom, everything should be good, right? No, that is common mistake number one, thinking that you can hop in at the end of the year or after the year is over and do all of your bookkeeping for the previous year, and that'll be really clean, simple, and easy. Can you do it? Absolutely, yes. Is it super easy and only take an hour of your time to do a full year of bookkeeping? No. So, common mistake, thinking that bookkeeping will be super easy for the full year. What I would recommend doing is either taking 5 minutes a day or an hour or two a month, depending on your volume of transactions, to go through and do the bookkeeping. A month is probably a little bit long, depending on the size of your business. I would recommend either, a month is fine, but daily or weekly at most. That way you can keep up with your transactions and you can stay ahead of the game. Common mistake number two. This one burns me because you can use it as a tax write-off and it throws off your books. Common mistake number two is not fully capturing those merchant fees or small expenses when you are pulling in income from a merchant vendor. So let's say a Stripe or a Square, there's a million of them out there. When they dump that money into your bank account, they are not capturing the fees most times. So what you need to do is go into your payment processor and see the amount that they pulled out for transaction fees. Sometimes you can get loans through Stripe or Square and they pull that out before they deposit. All of those things should be accounted for. I know with Etsy, they pull out some advertising fees. All of those things need to be accounted for because that was money that was put into your revenue and then pulled out as a business expense. So you want to be able to deduct those payments. Number three, common mistake. This one drives me crazy. Not getting a W-9 form when you work with like a contractor or anybody that you are paying money to that's not like a huge business or corporation. So anybody that you are paying $600 to or more, this is not including Walmart. This is not including Target. This is not including huge vendors that are corporations. But let's say you hire someone as a contractor and you pay them to do a service for you. You have to get a W-9 form completed from them. Rule of thumb, if you are giving them money, I like saying even if you're not going over that $600 off the bat, if you are giving them money, request that W-9 form up front and say, in order to get my money, I need you to give me your W-9 form. A lot of businesses, a lot of contractors are familiar with this form. They'll shoot it right on over to you. No problem at all. So tip number three, please get that W-9 form. It will make tax time so much easier because as a business owner, you need to report to the federal government in the United States who you've paid $600 or more to. And if you have that W-9 form, it makes it very easy to report. If you get to December and you're like, oh, shoot, I've paid all these people, but now I don't know how to get a hold of them. I don't know their EIN number. Then you have to go back through and try and contact them and get this form completed. It's very stressful, very time consuming. Your bookkeeper will not be happy. They might even charge you more for it because now it's more work on the back end of it. So just make it easy on yourself. Request the W-9 form from that contractor right up front. It will make it so much easier on the back end. Number 4, dumping money into undeposited funds and then not creating a bank deposit to match that. So a lot of times when you accept payments through QuickBooks, you can deposit it into undeposited funds. And what this is, it's kind of a separate bank that QuickBooks has developed or created where you can dump money into and then match it for when it shows up. Or let's say somebody pays you in cash, but you haven't deposited that money into the bank yet. You can put it into undeposited funds, and then when you deposit it into your actual bank account, you can move it from undeposited funds into that bank account that's in QuickBooks or your accounting software. A lot of times people don't understand what undeposited funds is, and it gets confusing. So they keep dumping money into this undeposited funds amount, and then when they get paid, they don't account for it. So there's money deposited in undeposited funds and then money deposited into their bank account, and it gets all super messy and jumbled, and then it is a beast to unwind. So please understand how to do your undeposited funds. If you don't understand what it is, either do some research or reach out to us. We will be more than happy to walk through that with you. Number 5, not reconciling your accounts at the end of every single month. This is vital to accurate bookkeeping. If you are not reconciling your accounts, that means you are just trusting that whatever is dumped into this accounting software is accurate. And let me tell you, almost every month somewhere with somebody, there is a mistake. QuickBooks, that's what we primarily use, but there are a lot of accounting softwares out there, are amazing tools, an amazing resource. I would highly recommend using them, but they are just a software. They are there to help you. They are not there to know what's happening in every aspect of your business. So it's important to reconcile at the end of every month so you can find if there is an error, if there was something not pulled in from a bank feed, if somebody jumped into your QuickBooks, an employee or something like that, and put in something extra that shouldn't be there, you can't catch that until you reconcile. And if it's in the accounting software, it is more than likely on your reports. So that means if it's in the software, you didn't reconcile, so you don't know that it's inaccurate. When you pull your report, it's showing up on your report. So it could be overestimating your income, it could be underestimating your income, and same with expenses. So for our clients that work for us, or our clients that we work for them, do their books and such like that, it is a priority. It is a must. Every month, all of your bank accounts, all of your credit cards, all of your loans are reconciled monthly, because if something is wrong, that means the data is wrong. And how can we help you predict your income, plan, budget, cash flow, all of those things? We don't have accurate numbers to work with. So reconciling is vital. All right, number 6, capturing other expenses that are not run through your bank accounts or credit cards that are on file. A lot of times these go forgotten. So let's say your personal bank, your credit card, you swipe it to pay for an expense because you don't happen to have your business credit card on you. It happens all the time. I do it too. But that needs to be captured in the books so you can go ahead and take that as a tax deduction. All right, last thing, this one gets a little messy. I wasn't even sure if I wanted to throw it in there, but it is vital and it messes up a ton of people's books. And this might only be QuickBooks specific. I can't speak for other softwares out there, but one of the most common mistakes I see with accounting software and in bookkeeping is not accounting for transfers accurately. This can cause a beast of a mess. More times than not, this is what we have to clean up when we start working with clients. So a lot of times what happens is when you're looking at a bank feed and a transfer comes in or out, either way, they, you, they, them, whoever we're talking about here, you tend to categorize that as an expense or as an income. But if both of those accounts are in the books, they need to be accounted as a transfer, not an expense, not an income. Because if you don't count it as a transfer, as both of those connected, then you count for it over here in this one account, and that it's also accounted for in the second account. They're not considered the same transaction. So you're duplicating that same transaction. So a lot of times when I'm trying to explain it to people, you have, we'll say account number 1 and account number 2. You need to transfer account number 1 to account number 2. And those need to be considered transfers, not as a categorized transaction. And then in QuickBooks, you also need to create that transaction so the software can connect 1 to 2, and it sees it as a fluid motion, not as 2 separate transactions. It's important to keep in mind that we are working with a software program. We're not working with another human being. So the software only knows what we're telling it. It's going to do whatever the human tells it to do. Yes, there are little tips and tricks that we can try and automate these things as easy as possible, but I would never recommend like an auto add anything, because as helpful as QuickBooks tries to be, it is just a software. It is not a human, and it's amazing, and I love QuickBooks. It is not a human. So when we're doing those transfers, please, please, please record them as transfers, not as categorized transactions, because it will mess everything up in your books. So I hope this was helpful. I hope you wrote a few things down. Watch this as many times if you need to. If you have any questions about anything I touched on here, I have lots more detail on these things, but I just wanted to kind of nitpick a few things of common mistakes we see when it comes to bookkeeping and QuickBooks specific. But I hope you guys are doing well. I hope you are kicking ass in your businesses. If you need us, we are here. And as always, cheers to profit.